Hey everyone, this is June from Turning Point Life Investment, and this video is for January 31st, 2009. So starting with your 3-year weekly view of the S&P 500, we're going to use SPY as our ETF. So this is the candlestick for this week. Let me zoom in a little bit. Okay, really not a whole lot has happened. The bulls try to rally towards the beginning of this week, but after the Fed announcement, the bears managed to push it down. We had what's called a sell on the news type of situation. Let me go into a daily view to explain a little better. So you see, we had a pre-rally, okay, pre-announcement rally. Typically, that's usually the case when people expect the outcome, or they pretty much anticipated that the Feds are going to leave the rates steady. So they bought into it, pricing. Basically, they priced the news into this rally. And when the announcement came out, there was no surprise. Typically, when there's no surprise, then there's really no reason for people to be buying into the market. And as a result, we had Thursday and Friday as a pretty good sell-off days after the news came out. Okay, so that's something to pay attention to. Usually, if you're waiting for some type of big report or news, such as earnings, and you see a pre-rally before the report, and if the report comes out as expected, more than likely you will see a sell on the news, unless something more surprising and more dramatic gives people enough reason to jump back into the market. So right now we do have our immediate support right around the 80 level and immediate resistance right around the 89. I would say around roughly the 89, as well as this 50-day exponential moving average. So these are your immediate support and resistance. Overall, if you were to look at the market here, we are in a very large trading consolidation range, okay, with a lower boundary roughly around the 75 level and an upper boundary around the 95. Let me take away the studies for you guys. Okay, so sometimes it's good to just take a step back. Right? A lot of times we're so caught up into these intraday movements that we tend to forget what's going on with the big picture. The big picture is telling us that we are in a sideways kind of consolidation pattern. Okay, this is indecision. This is confusion right here. All right, the bulls and bears aren't really sure where to push this market. They pushed it towards this boundary. Most likely, prices will probably come back towards this lower boundary. So until we get a nice break down below or break higher, expect this type of whippy choppiness to continue. Okay, so trading, this is definitely a trader's market, not really an investor's market. Okay, because trading, you should take, as far as my recommendation, take shorter targets. Okay, because with a lot of whipsaws, your stops can turn around and hit your stops pretty quickly. It's different if we're trading this type of market where you have strong momentum, you can just let your profits run. But in this type of market, you can't really let your profits run because you never know when it's going to turn around against you. Okay, next we go into the VIX. You see how I left the triangle wedge pattern here with the VIX. Okay, on Wednesday we managed to actually tag. I don't know if this is a true tagging. I don't know if it's an error or not with the data, but you can see how we've prices have more or less pretty much fit within this triangle except for this little peak right here. Okay, that's a little head fake up there. But nonetheless, we're approaching the apex of this triangle. Okay, this is why the market's been in consolidation, because even the VIX has been in consolidation. So until we get a nice breakout of either above or below, pretty much like the market, this both indicators, sentiment indicators, and the market itself is telling us that this whole entire market has been in consolidation. Now, if there's any predictive value in this type of pattern, this is typically a consolidation pattern of the predominant trend. So the predominant trend previously is up for the VIX at least. So if this is correcting this uptrend, then most likely we will have another up leg for the VIX, which translates to another down leg in the market. So just to recap, overall, I do feel that we will probably retest the November low. It's just a matter of when, most likely next week, based on how this pattern has been occurring. So one way to trade this type of market is to do iron condors. Okay, place some credit spreads above resistance here, above 95, or place some bull put spreads below here underneath 75. Okay, I do not recommend placing any type of credit spreads within this range because, like I said, your stops can get hit pretty easily if you place it within this range. Place it outside, and it should hold. If everything holds, then your position should expire worthless.